House prices in the UK fell 0.2% in April. That's according to the latest nationwide survey. Well, it says that the typical price of a UK home is now 1.3% lower than it was at the same time last year. But Nationwide says a three-month comparison shows a modest rise of 0.6%. Well, to talk us through what those numbers mean and what we can expect to see in the year ahead, I'm joined now by Nationwide Chief Economist Robert Gardner. Robert, thank you so much for joining us on the show. Were you surprised at all by these figures, or it seems to confirm the trend that we've seen in the past?
Yeah, over the last 6 months, the housing market's been fairly stable, and these figures really just continue that trend. Really, house prices basically where they were 6 months ago. Over the last 6 months, we've had three modest price increases, three modest price falls. This pattern of stability is really what you'd expect, given that the recovery has been fairly sluggish.
In terms of what you're expecting for the next couple of quarters, do you already have an indication of where prices might go?
Well, we think that the recovery is going to remain pretty unspectacular. We think that the UK economy is probably going to remain growing at about 2%, a little bit less than that over the next 12 months. And as a result, we think the housing market is going to struggle to do much better than just move sideways. I mean, the outlook is still very uncertain, but our best guess is that house prices will continue to move sideways, maybe just a little lower over the next 12 months or so.
And of course, you make a difference between London and the rest of the country still.
So, I mean, obviously, trends in the housing market depend on economic conditions, and what we've seen is that the capital, the London economy has bounced back much more strongly than people had expected, and as a result, the housing market in London has performed better than many other parts of the UK. So, really, wherever you're looking, really the outlook for local economic conditions are key to determining what happens in the overall housing market.
And what is still driving these London prices? Is it foreign buyers, a weaker pound, which means that there are more European buyers, or just in general bankers' bonuses back up?
Well, the market is still fairly sluggish. It's just that it's better than the rest of the UK at the moment. Labour market trends are key in London as elsewhere, and the fact that the London labour market and the London economy more generally has been more buoyant than the rest of the UK, that's really what's explaining the stronger performance in recent quarters. As you look forward, what we think for London and for the rest of the UK is that we'll see a gradual improvement, both in the wider economy and in the labour market, and that will gradually feed through to stronger housing demand and a gradual recovery further out. But over the next 12 months, probably sideways is the best we can hope for the UK housing market.
And Robert, after the next 12 months, you say this gradual increase, what kind of price levels are we talking about? 3–4%?
I think for the UK as a whole, we're probably talking about a sideways move for the market as a whole, and then gradually through 2012 and beyond, we'll see gradual increases in house prices. But if you look at the level of house prices relative to incomes, housing still appears fairly expensive, and as a result, what we think will happen is that house prices will continue to lag earnings growth even over that latter period. So the next 12 months, probably a sideways move, and then thereafter, gradual low single-digit increases probably in 2012, 2013.
Robert, thank you. Robert Gardner there.